low. Okay, you would screenshot it as it happens, and then you would anticipate it running above this high, and what you would do, classically, it will do that. Your key time, 7 o'clock starts the Asian session. Outside of those two reference points, then you look to the left and say, okay, where are the larger pool of liquidity? Well, obviously it's here. So if we have that, once we broke through here, we have to see it do another characteristic with the new day opening gap. We have to move away from it initially, go to a short-term high to take liquidity out, which it does here, and then drops down below, crossing over the new day opening gap. So this is where you want to see it coloring outside the lines. Okay, so now we have what happened. The market crosses back above new day opening gap. Does it take out the low here, right there? As we're heading into 7 o'clock, what is it doing? Is it moving to this low to challenge this sell side liquidity?
Absolutely not.
So what is it doing here energetically here? What is it doing?
And it's placed in the upside.
Right. So it's crossing over the new day opening gap. And then at 7 o'clock, what does it do on the 7 o'clock candle? Look close. Let me take this away for a second. What do you see it do?
And it dips back into it just slightly.
It retrades to the new day opening gap that was formed right over here. You see it touching that?
Sure.
So if it's going to go back to that after having displacement here, it's already set the initial boundaries for the sell stops and the buy stops. So the algorithm is giving the signal right here. Now we're inside the element of time. So the market should displace above this high, relative equal highs, challenge the initial buy side liquidity, and will test and hold to see if it can run above this high. Now, because you sat with me last night, we actually did this. We actually traded it. We pushed the button, and there it is. But